Here's a quick article from Canadian Mortgage Trends. Basically just summarizes, I think the story broke from a local Windsor paper, because of course that's where Rocket Mortgage Canada is based, given that their US counterpart is right there in Detroit. Yeah, so that kind of broke there, and then everybody kind of scrambled to pick up the story. But yeah, long story short, I think it was a decision to kind of refocus on the US market, their home base. Of course, it's a bit of a sad story. I know a couple of those guys personally. Of course, we've had even some on this podcast. I don't think it has anything really to do with the team. I don't know. I mean, it's so hard to say from an outside looking in, but from my interactions with the team, they've always been a great team, it seems. But long story short, that's happening, and yeah, it's too bad to see another lender kind of get shut down there. But it's an interesting thing. A lot of people, I think, are saying, "Hey, is this a response to the tariffs?" My take on it is it probably wasn't just that, right? There's probably 100 different, like a lot of these really big decisions. After 5 years of running a business, to shut it down, that's a massive decision. Probably didn't have, I would say, wasn't the only factor, but it probably didn't help, right? Just this uncertainty, this protectionism, this type of ethos probably didn't help the decision. Maybe it was the straw that broke the camel's back. I don't know. But that's kind of my take on that. I don't think you completely attribute to it, but it certainly didn't help, right? I think that's a good way to do it. But bringing it back to the tech side, of course, everyone right away from a tech perspective starts saying, okay, what does this mean for Lendesk, Finmo? Of course, because they are owned by Rocket Mortgage, right? So there's Rocket Mortgage in the States. They, of course, own Rocket Mortgage Canada, but they also own Lendesk and Finmo. And so I'm sure enough of those questions came swirling around. And so in response, actually the Finmo team, and I think was a great move, Finmo / Lendesk team kind of came out, kind of getting in front of the story, so to speak. I think they probably were getting a ton of inbound requests and just said, hey, let's get in front of this. And so I'm sharing on my screen here basically a letter that Joe Tompkins, who's on the team there, he shared on his LinkedIn. And this is a letter from their president, Carter, where he basically just talks through it. He says, the three big themes he talks about is they're still here. Lendesk is still here. Great. And they're profitable and they're growing and hiring in the Canadian market. They're dedicated to that. Second, that they're grateful for the Rocket Mortgage team and what they did. And third, Lendesk is really pushing hard, right? They are trying to change from a technological perspective what it means to do mortgages in Canada. It's a movement and they're still very excited about it, and they invite anybody to come along. So, reading that, I think it's a nice letter. And I think that my take on it, right, when people say, okay, well, Rocket's leaving, and sure, Carter could write this letter, but what does it really mean? What does it all mean? Of course they're going to do a letter like this. My take on it is, I've had conversation with Carter. I think most of what he said in this letter, he said to me privately. And so I don't think this is him, putting together a story or anything like that. I think this is absolutely true and how they think and act over at Lendesk / Finmo. So I think my take on it is exactly at face value. I think the letter is genuine, again, based on what I know about the company and about Carter and Joe and all those guys over there. And so I'm not reading too much into it as it relates to really what it means for Lendesk's future. I think, you have to evaluate that company and their operations for what they do, not what their sister company and other people do around them. So that's kind of my take on it. But there's always a but to it. So that's kind of the, hey, give the benefit of the doubt. Unless I see it otherwise, I'm going to continue thinking that Lendesk is doing their thing. The but, though, with all of this, I think is maybe not just a comment on Lendesk and Finmo. I think it's a bigger comment about Canadian and Canadian mortgages, Canadian mortgage tech, even, let's say, is that, there's enough of these factors swirling around, and this is a signal to it, to say, I don't think that a lot of US companies are, at least right now, looking up to Canada and saying, hey, that's a market that we really are excited about and want to go address. And some of you listening might say, well, that's a great thing. We don't want the competition. We believe in Canada. We can believe that we can make a difference. And, that could very well be true. I'm not going to argue that one way or the other. But my take on it is, more options are always better. More options are better than less options. And specifically in the eyes of the consumer. We've heard endlessly about our telcos being endlessly uncompetitive. We really only have 5 banks in Canada that do 80, 90, whatever it is, % of the mortgages in Canada. And I think ultimately that doesn't serve the consumer. I think the best way to get innovation, we talk about, again, getting things like open banking and things like that. The best way to get it is competitive pressure, right? But if we have, these oligopolies, these very small number of companies that control very large industries and very hard to compete with them, and foreign, I guess you could say, companies wanting to come to Canada but not being able to compete with them directly, it just leaves us with less choice, less competition, which ultimately I think hurts the consumer. So